Hello, everyone. Welcome back to Gold Predict. I have three charts that I want to share with you today that are rather ominous and support the potential for a major top in the stock market, in particular semiconductors, as we're looking at this chart here, which could lead to a significant bear market into 2024. So first, we're going to start with this one. This is the iShares Semiconductor ETF, SOXX. This is a monthly chart. And what I want to bring your attention to is the potential for a double top here. With a double top, I like to look for symmetry, and this is almost perfectly symmetrical. It's beautiful. On the larger pattern, I like to look for what would be considered like a capital M, a large M. So that would imply, well, let me back up. For a double top to be confirmed, prices have to close below the valley floor. So this is the valley right here. This is the valley floor at 285. Prices need to close below that on a monthly basis to confirm a double top. So we have a long ways to go before that happens. But if it is completed, we would have a target area of around $150. That's plus or minus 10 points. And that would take prices all the way back to the 2020 COVID lows, which few people, I think, are anticipating. So with that chart complete, let's move on to the next one. All right, the last chart was a monthly chart of SOXX. This one is a weekly chart of Netflix. And what I want to bring your attention to is we have another trend line break. So the last time this happened, we had the strong run up through 2020 and into 21, and prices broke. And then when they broke hard. Then they fell sharply. We have a similar setup now. Prices rallied strongly from about mid-year last year, and now they're rolling over, and they're going to close below the weekly trend line this week. Now, it's always been my impression that we've just been in a bear market rally. So if this was phase one of the bear market rally, and this is the reflexive rebound, then stage two could be beginning right now. And if you'll notice here, the broad stock market peaked in January of 2022, but Netflix peaked a few months earlier. And that could be happening again. Prices peaked here back in July, and they're rolling over, and now we are below the trend line. Price target, I think we could see possibly 130 if this move is, a replay of the initial breakdown. And there is support around that 130 level right there. So that would constitute a fairly sharp decline. And now to the final chart. All right, for the last chart, we got a lot going on here, so let me explain it. This is the yield curve. This is the 2-year versus the 10-year note. Okay, so anytime we go below the zero line here, that means that the yield curve is inverted, that the 2-year yield is higher than the 10-year yield, and that shouldn't happen under normal market conditions. I highlighted these shaded areas. Anytime that this has happened for longer than 6 months is almost a guaranteed recession. So we had it back here in 2000, here again in 2006 and 2007, and we've been inverted now for over a year. In the bottom panel, this is the MACD line, and I have a 10-week smooth EMA. And whenever the yields were inverted for longer than 6 months, and the 10-week EMA crosses back above the zero line, this is the green zero line if you look over here, that usually indicated that the yield curve is uninverting, and that's almost a sure sign that the stock market is getting ready to roll over. And if you follow me all the way up to the top, in the top panel, I have the stock market. This is the S&P 500. So that occurred here, and this was after the peak, and prices went into a long bear market. It happened again here in 2007. As soon as the 10-week EMA broke above the zero line, you follow this up. The S&P 500 peaked, I think it was in October, so this was a few months early, but rolled over into a strong bear market. With the current trend pattern and the current momentum, I believe we could be back above the zero line maybe in a month or 2 or 3. And if you take this all the way up, that could indicate that the stock market is either peaking or very near a peak right now, supporting the other charts I just showed you. So what's that mean? That means be careful, be cautious right now. There's a lot of red flags out there warning recession and a potentially strong, catastrophic, even bear market. I just wanted you to be aware. I hope everyone's well. If you like this kind of content, you know, subscribe, hit the like button. If you have any charts you'd like me to cover in future videos, I'd be happy to do so. Just leave some ticker symbols down in the comments below. And we'll see you next time. Thanks. Bye-bye.